Oh, weird. Okay, we don't have an intro today. Oh, I didn't start it, that's why. Okay, well, you know what? Happy Tuesday,
Hello,
everybody. You would
we're
think it
here.
was Monday. Welcome to Blockchain Banter, Trading Crypto. I'm Jen. I'm your host. I'm here with Keith Allen, TA and algo trader, order book analyst, and co-founder of Material Indicators, along with Dr. Mark Richardson, project lead at Bancor and Carbon DeFi. Thank you, guys. Before we started the call, I was just about to tell you, while we normally have our countdown, I was laughing last night because I fell asleep to a post that, everything is looking bullish and the charts are looking great and we should be reaching, could we reach $100,000 by, morning? And I woke up this morning and I looked, and the first post I see on my feed is we're turning into the bear market now. So it was the exact opposite from what I had fallen asleep to. It was maybe at a time span of 5 hours. So I thought it was funny, and I wanted to, I'm sure there's a happy medium in there somewhere, right? What are you seeing? I did notice, Keith, a little bit last week, we had mentioned a death cross, right?
hmm
And I noticed that you had posted about this a little bit, and I saw that you were really taking a closer look at a specific whale, or maybe some whale movements. I think you named him.
Oh yeah, Spoofy the whale.
Yes, you did. Spoofy the
We
whale.
we've seen this before, and it's you know I say this, people who are skeptics about utilizing order book liquidity as a tool for trading. I think this illustrates this as well as anything. They go, well, what happens? They spoof half the time. Well, they don't spoof half the time, but when you can pick up on patterns. All right. First of all, let's just imagine we're all trading candles, which I do. Right. I'm obviously looking at candle charts every single day, and I do all my TA on my candle charts. But we're really trading within the confines of technical analysis, but we are blind to what's happening in the order book, right? I mean, yes, you can see the numbers go by at 1,000,000 miles an hour if you're in tune to that. And for those who are good at monitoring liquidity, there's certainly tools for that. But for the average trader, I would say the average trader is just looking at their levels and they go, okay, here's where support is, here's where resistance is, here's where I'm taking my profits, here's where my stop loss is. Boom, that we're going to execute the trade.
Right.
But when you can see what's happening, when you can see support show up at a certain level, when you can see resistance show up at a certain level, and you can see it moving up or down or up or down, or from above coming down, then you have some clues to where momentum is shifting, where price is going to go. And that's exactly what we see when we're looking at a data visualization tool like Fire Charts, which shows us the liquidity in the order book moving. And so we've had this entity for the better part of probably 2 weeks at this point, placing large asks. I don't call them sell walls because they have no intention of selling. They're moving. I call it liquidity herding. They are influencing price direction, and sometimes they push it down, and then sometimes they'll pull it up, they'll move up and let price float back up. And so if you look at it, and I'll share it, if you look at it, it looks like, oh, these guys are chasing price. They're not chasing price. They're pushing price. And so if you can see it, you can trade it, is my perspective on it. And so this is exactly a beautiful illustration of that. I'm sharing Fire Charts on the weekly chart right now, and you can see these larger concentrations of liquidity. This is $66 million. This is basically the same blocks moving up and down, and it's double stacked here. And one of these may be insulation, right? So like the lower levels would be insulation. So if it did get hit, they're not getting, they've got some time to to pull this or move this before this gets, before they take their whole stack, because you're looking at, over 100 million. People also say, oh, those aren't big numbers. 30 million, 60 million, that's nothing. Well, in the grand scheme of the entire market, it might be nothing, but in the grand scheme of what we normally see in the order book, it's significant. And so look at this. This is just in the past, 24 hours or so, right? They had pulled it on the weekend and let price start to move back up. And then it reappeared, starting to push price. And when price started to come back up, they pushed it down. And price started to recover, they push it down again. And so this is something that I think is tradable, right? If you're into the intraday volatility or the intra-week volatility, this gives you some opportunities to play with that. Now, if you are in this on the longer game, then maybe you realize, and this is my perspective, this is a game. This is a range game. We have something fundamental happening tomorrow that I don't expect us to break the range. Right? We've been in a range, and we've talked about technicals and death crosses, and we've been pinned under the 200-day moving average since we lost it back on Sunday, March 9th, and retest after retest has failed. And now we see an imminent death cross between the 21-day and the 200-day. That's not great for momentum either, right? And look at where price is holding so far. I say so far, right? Here's another retest on the trend line. And so everybody's saying it's over, the bear is here. Well, maybe this is the beginning of that, but the way I'm seeing it is this is a support test on the macro structure. And so we know we have influences coming from the government that are influencing the markets right now. And the biggest influence is that the market is uncertain. The market doesn't know how stuff is going to plan out. If the president would say, listen, we're going to put these tariffs on Mexico and Canada, but, would you rather be paying and I just discovered this yesterday at the grocery store. Okay. I buy avocados. I buy a lot of avocados, eat a lot of avocados. And anybody in the US has seen the commercial, avocados from Mexico. Avocados are being tariffed, right? And the price has gone from like 89 cents an avocado to $1.50, $2 an avocado.
Things are different in Miami. I'm seeing the opposite.
And yesterday, I bought avocados from California.
Oh.
And guess what?
How much were they?
They're at the old price, and they're not tariffed. So yes, tariffs are putting pain on us in a lot of places, and this is one example. So don't come at me with, oh, but what's it going to mean for the supplies and the feed and the what? I'm just talking about just one illustration that, yes, this is pain on the economy, but what does it mean for the American farmer? And then if we extrapolate that into other things. Now, this is not me advocating for tariffs, but what I'm saying is if the administration would come out and say, hey, this is really what the game is, and this is really how it's going to play out. And we also know that there's a lot of negotiating going on with these tariffs, right? That this is also a negotiating tactic. And so if people would realize that and know that this isn't probably a forever thing, maybe some of them will be, and maybe at some level they will be, but it's not likely that the president is going to shut down the auto industry, right? In fact, it's the opposite. He's trying to force that manufacturing back into the U.S.
Right.
So I'm just saying, if there was some clarity on what the strategy was, rather than what seems like a madman, then the market might stabilize a little bit. And until that happens, I think our
Do you think there is some clarity though? You just have to kind of see the bigger vision here.
Well,
I mean, like there's an end game, right?
right, but
It might seem a little bit sporadic though.
well, it's
Like
right. It's erratic, and the market doesn't like that. The
thank
market
you.
likes certainty. The
Right.
market likes stability, and we're not getting that right now. So
Traders don't necessarily though.
So, well, traders, traders like the volatility, sure,
Right.
but investors like stability. And tomorrow we have an FOMC meeting, rate cut meeting. Nobody thinks there's going to be a rate cut. 99% of the market believes there will be no rate cut tomorrow. Okay. So that's already baked in. The fact that there will not be a rate cut tomorrow, right? I don't think I've ever seen this. 99% say no rate cut tomorrow. But what's that mean? What's the market going to be listening for? What's the market looking for? They're looking for stability. So Fed Chair Powell has more power in his words tomorrow than Trump has with these tariffs right now.
We got a comment about the tariffs.
He can say, and he's going to be asked, right? He can say that he can either say that, hey, these things that the administration is doing, and he's not going to say the administration, but he's going to say, increases in unemployment either are or are not a concern. Tariffs either are or are not a concern. We either are or we are not moving closer to a recession. And so if he says that, hey, we're seeing some indications that this behavior, this market dynamic could increase the potential of a recession, market's not going to like that. But if he says, as he said 2 weeks ago, we see no indication at this point that unemployment is going to be inflationary, or that the tariffs are at this stage a problem. We'll see. But I think that's what the market. I think that's what the market is waiting for. Now, in terms of whether we can actually hold this structure, in terms of whether we can hang on to this, nobody knows how long this game is going to go on for, right?
You think we're just going to range in the meantime?
I can't guarantee that, because if
no guarantees, of course.
I mean the man is I just saw, and I've been running today. My dad just broke his foot, so I was like out the door this morning and going to help him out this morning. So I've only seen headlines. I've not seen any news, but maybe you guys can confirm whether or not Trump is meeting with Putin today.
Oh, I don't know. Mark,
I haven't heard anything about. I haven't heard anything about that, but unfortunately, I've been busy with other things. I've been off of social media, but I didn't even know that was announced.
So I mean that in itself, the outcome of that meeting certainly has the potential to be a catalyst for price direction. So who knows, right? So yes, the president and his policies certainly have the ability to break the structure, freak out the market, and kill the bull. And Powell has the power to do the same, kill it or save it, or at least keep it roaming in this pasture, keep it roaming in this range until we have more clarity. So,
and you said earlier, I mean, this is a range game right now, right? This is not.
This is a range game, but if we lose this, we're extending the range lower. And at some point, we're going to have to admit, if it really breaks down, at some point, we're going to have to come to terms with the fact that it could be over. What I don't, as bad as the daily chart looks to me, losing these moving averages, this, another imminent death cross, the weekly chart, to me, paints a different picture. And maybe this big green arrow is symbolic of that. Well, I mean, listen, again, something out of the White House or something out of Fed Chair Powell's mouth tomorrow could invalidate this, and we could plummet right down. But as you can see here, All of the moving averages are unwound. We are within the structure. We're now on 1, 2, 3, 4th tests of the macro trend. We have a little bit of wiggle room here with an area of confluence that we had pointed out earlier, down in the 76K range, which has confluence with that 50-week moving average. And there's an opportunity to potentially go there. And if we should lose that, and I think we talked about this on the last call we did, then we could see things potentially even go down to our 21 top. We all remember how much time we spent in that range.
Yeah.
This is significant for so many reasons to me. Yes, it was the 2021 top. That's the first thing. Number two, it is an area that we spent. Do you remember? The whole world was saying 70 grand and I was saying 69. I mean, not that it matters, $1,000 difference, but this is why I had so much conviction on 69K. And on the day that Trump was elected, on election day, and the big Trump pump started, what range did that break? Well, here's that candle right there. And the low on that candle was 67.5.
The high 69, is that what you're showing?
We closed at 69,386. That was the RS flip at 69K on election day. And so those big corrections that Mark and I have been talking about and waiting for a really long time, this would symbolize not only that, we said 20 to 40% on average in these situations, that would take us, we'd be within that 40% range, and it would symbolically retrace the entire effing Trump pump.
Okay, if that were to happen, though, I mean, does that necessarily mean bear? I mean, if we've seen this 20% to 40%, I mean, in the bear,
in my opinion, it doesn't necessarily mean bear.
Right.
And now I would want to see a pretty good recovery from there.
Of course.
Right. Now, if we degrade from there,
then it's not looking so
that
good.
might mean bear.
Right. Mark, you generally look at the moving averages on the weekly. Are you kind of seeing the same things that Keith is seeing? I know that you guys had kind of came to the same conclusion 2 different ways last week. We were seeing.
Yeah.
Are you still looking at the?
Yeah.
I don't know if you want to bring up your chart, or just you can use Keith's here too.
Yeah, sure. I'll bring up my chart. Well, I'll show you something else I've been doing, and it came from. Let me see here. Sorry, I've got all these windows open.
If you're gonna say you have a whole ton of tabs up top, I mean, you're not alone. So we'll be patient. Yes.
Yeah. So yeah, one of the. So first of all, yeah, what Keith is referring to is, it pretty much speaks for itself. So if we bring up, BTC USD, and this is the one that I think, it's still got that sawtooth pattern on it from before. This is the monthly chart, by the way. And so on the monthly, it's still, I mean, in my opinion, it still looks a little bit overextended. On the weekly, remember we had this divergence on the RSI. So that's referring to this higher high here, and then on the RSI, this lower high, which generally is an indication of a reversal. Doesn't necessarily mean that we have to enter into a bear market. In fact, I still think, all of the observations that we made on the, the 4-year Bitcoin cycle are still mostly intact, right? Especially if you kind of zoom out and have a look at how the price is tracing out this sawtooth pattern. I still think that target of 153K is, remains valid. The question is, what's going to happen between now and then?
Right.
Isn't it funny? Isn't it funny how every time, or any time, the market or prices drop down to, essentially, range support levels. And in this case, we're talking about a macro range support level. People, you hear everything, right? It's over. The 4-year, the cycle doesn't exist anymore,
Yeah,
Well,
yeah, and we're still 17% above the resistance that we were in August of last year.
right.
You
I
know,
mean,
like
all of those things could potentially develop into something and may evolve into to some of that speculation. But at the moment, the structure's still intact. There is no validation of any of that bullshit.
exactly. Yeah, I think that the bullish this looks like a bullish continuation pattern to me, honestly. Like I still think that there is a lot of distribution. I think a lot of distribution happened around the 100K. I think that that came in premature. But you know, I've said that about this cycle in general. You know, like I really do feel like it was ahead of time this whole way. Especially compared to, you know, the last market cycle where we spent a huge amount of time sort of under here in the pain before we had that parabolic rise.
We never
Whereas
really
here it's
had that
been,
one significant like retrace sort of
yeah,
that
there's
you
there
guys
hasn't
were thinking. We skipped right
there
over that this cycle.
really hasn't been any blood, you know,
Yeah.
and that kind of makes me nervous. You know, I prefer stuff to get kind of panicky, and it feels like the sentiment right now is definitely quite panicked. On the weekly chart, maybe that's justified. You can see the you know, the MACD is still sort of accelerating down here. It wouldn't surprise me if we come back, and like I said, I do expect us to close, you know, somewhere around this, you know, around the 50 SMA or 50 EMA weekly. So that'd be, you know, just underneath 80K, somewhere between sort of 75 and 80. Like I do think that that is the most likely, you know, bearish scenario for Bitcoin in the interim. But we've already wicked down to it like twice and touched it. You know, maybe that's going to be it. I don't know. But it has been holding sort of the 50 week as support since, you know, since all the way back in October of 23. So this touchdown really doesn't, I don't think should frighten people that are in it for the long term. And I think that a rebound from here as we head towards a new all-time high is likely. I don't think anyone should be, you know, too afraid about that. But one of the things that I was looking at, and you kind of got a quick preview of that as I moved my screen up, was that I've started wondering if maybe measuring Bitcoin versus something other than the US dollar makes sense from a technical perspective. And it's just interesting to see, especially in the longer time frames, like we take this out to a month. This is Bitcoin versus gold. And the chart looks more or less the same, right? Because Bitcoin makes these huge, you know, exponential, you know, several orders of magnitude price movements. But it does kind of make some of these structures look a little bit different. So, for example, you know, in terms of making an all-time high, you know, versus gold, it was barely, you know, if anything, it was a wick, you know, to an all-time high, versus where it was in, you know, in May of 2021 and October of 2021. And this looks more like sort of an inverted head and shoulders pattern, for example. And you can also see that on the monthly, it really did, you know, come back to what is this, the 20 EMA, right? And it's actually been holding this as support since October of 23. So it came back to check it down here just with the wicks in what was that, August to November of 24. And then we had this like huge move to the upside, and it just really came back to check that moving average. If I was looking for a downside on Bitcoin, I'm actually wondering if valuing it in gold might make more sense. So at the moment, Bitcoin is trading at about 27 ounces of gold. But coming back to 22, I don't know, maybe that'll make sense. I don't really know, you know, where I'm going with this necessarily, other than to point out that the all-time high is mostly, I think, exaggerated on a US dollar scale because of, you know, inflation and other things. Whereas if you value it versus something that's also accruing in value, and gold has been, you know, performing quite well recently, you kind of, you know, you're giving Bitcoin an opponent that kind of makes more sense. And it's still looking quite technically bullish versus gold. You know, this pullback isn't so terrible. It's really just coming back to one of the faster moving averages, at least on the monthly scale.
What
On
would
the
you do, Mark?
weekly,
Create a sort of recurring strategy on carbon DeFi and have it like I don't know, like Pat's Gold. What is probably the most popular gold right
yeah,
now?
we can have a look at that. So if I
I mean, because you're saying you don't really know where you're going with it, but I know where someone could go with it if they actually wanted to, right?
yeah, and
If
so
you're if
it
you
is
see this obvious range.
Yeah. And so, people might look at that chart and think, oh, it's ridiculous. I can't trade, Bitcoin by quoting gold, but actually you can. Pax Gold is, one of a few different, tokenized versions of gold on Ethereum. And there are others. And, this is the Bitcoin chart in gold. And so, yeah, range trading gold and Bitcoin, it might actually make sense, especially if the market's going to be moving sideways for a little bit. But yeah, obviously not financial advice, but
well, you could find out if it makes sense if you wanted to run a simulation the way that you're showing people now.
Right, exactly.
You know what I mean? It might not make sense, and that's kind of why we have this tool.
And it's kind of cool to sort of measure profits in gold terms, I think.
Keith, have you done this?
Like I said.
No.
Oh, sorry. I'm sorry, Mark. Go ahead. That was rude.
Yeah, just like I said, that it's a it's a more formidable resource to be measuring value in, and one of the the tropes I think within the Bitcoin community is just how valueless fiat is, which is fine. I don't think that that's a controversial opinion to have. That if we just have a look at if you wanted to let's say scale out of a Bitcoin position at the top, would you rather scale into US dollars, or would you rather scale into something like gold?
Well, didn't gold just hit an all-time high?
Yeah, gold did just hit an all-time high, and but all of these assets are relatively slow moving. But we can have a look at
how long is that time frame you were just looking at, Mark? Wait a minute.
That was
we
3
didn't finish
months.
the simulation. I want to see it.
Sure.
So trading Bitcoin against gold, back testing this.
Oh, it was slightly longer than 3 months. This was from
March. Like a year.
Yeah, from March to November 2024. But yeah, this is 25% ROI measured in terms of gold, right? And because the gold price is relatively slow moving, it is appreciating, especially right now, but it moves relatively slowly. And so things like TA and things that you can do on gold, it does have some carryover. But yeah, technically it does look marginally different.
Okay. Sorry, I wanted to at least explain what the result of that was before we moved on. Keith, while you're doing that, Mark, Keith, you never said that you had considered Bitcoin and gold. Are you not necessarily like gold person? I know at one point we were looking at BTC and ETH because both of them look super strong. Obviously, Ethereum has seen better days, right?
Yeah,
But
I mean, I
you're
think it's
mostly
I think
labels.
what Mark showed with gold is actually really interesting and compelling. I haven't
Impressed.
I honestly haven't considered that. And I actually haven't even looked at BTC ETH in a couple of days. ETH continues to look horrible.
I just saw a post this morning that said eggs are down 44% and they've still outperformed ETH in the past month. So since you brought up avocados, I'll just throw the eggs out there. Yeah, but yeah, it's not. ETH is not looking too good. There's a lot going on there.
I mean, it really looks like it wants to go and sweep these lows back here, I think. So it's very hard to know, but we're not even that far from there now. Probably another 20-25%, something like
25%.
That. If it gets down here though, like I would be getting super greedy for at least on the ETH BTC pair. I doubt that it's going to go much farther than that. But at this point, I still think that it's got a long way to drop. This is one of the worst looking charts in recent memory.
How far is that? I can't. I got it on the small screen. How far is that drop?
Yeah, it's about 25%.
So what does that translate to on the
USD?
On the USDT chart? Is that about? Let's see. Okay. So the 2018 top.
Zoom in for us, Mark. Yeah.
And so I'm still on the weekly, and you can see this is. I mean, we've already from the top, we're already down 53%. And I would say, what's that? So 18% to 15. Yeah, so it could be the actual bottom of this range, about 27% down. and that takes us to the support at between 13 and 1350,
Right.
which is contentious at best. But I think that that's where this is headed.
So on my chart, I have the at 1389. I have the 2018 top, and that is beautiful confluence with the 100-month moving average.
Let me pull that up.
Is that the number we're all watching then? About 1400 for ETH?
Oh yeah, look at that. Amazing. So this tiny little orange, let me pull this up.
What is that?
So this is the 100 month, I think.
Yeah.
Because we don't have 200 months yet. Yeah, this is the 100 month moving average. And you can see that it's just finished catching up to the wick that we had back on January 1st, 2018. And so yeah, that is I hadn't seen that yet, but that is very surprising confluence. Yeah, I think that that's a totally legitimate target for Ethereum.
We just noticed that in real time. Well, I had that target at 1387, but this is the first time I've actually looked at it on the monthly like this, and that's interesting. They're $2 apart right now.
Yeah, that's really interesting.
And this will obviously, this will obviously change over time, right? This isn't going to have the same confluence over the next week, but it's interesting that that's where we sit right now. And as volatile as this market is, it's not out of the question this month. Certainly not out of the question.
Yeah, and you see the same bearish divergence here. So like,
yeah, I mean, we could see. It's certainly not unheard of to see a double-digit candle in a week,
right?
So, or even a day, for that matter. So,
True.
it's conceivable. I'm not saying it's going to happen. I hardly look at ETH at all, because every time I do, I get a bad taste in my mouth.
Yeah, makes sense.
Because I own some that's deeply underwater, and I'm just trying to figure out, am I going to just, I was staking it for a while, and then I pulled it from staking.
Okay.
And then I pulled it from staking. No, not DeFi staking on, still Coinbase staking, which probably isn't as good of a rate as I would get on DeFi. But I unstaked it, thinking I might close it out, and then I, just holding it and watching it bleed. So my options at this point are either just stake it and forget it until the sun shines again, DCA it with another order. I've got a little bit of room. I would increase the position slightly, but I'm not going to like double it at this point. It's already bigger than I probably want, considering how this asset is eroding.
Mm-hmm.
Right. Don't throw good money at bad money. Or do I DCA? And if we got to a position like this, I would probably pick up a little bit more, improve my average price, and then stake it and let it go.
Are the alts bleed? I mean, we're talking about Ethereum bleeding out, or at least not performing so well. What are the alts bleeding? I mean, I hate to say that. I don't want to, but for a minute we were like, is alt season here? Things are looking good. And
well, it was always a look at what's
Bitcoin doing.
What are the key characteristics and components we need to look at to determine if alt season is here. And there was like, I don't know if we would consider the Trump pump as an alt season, or maybe a mini alt season, because we certainly saw alts, do some amazing things during that time. But it didn't really the market didn't really have all of the characteristics of a true alt season, in my opinion, at that point.
Right.
Let's see what returns.
Mark, zoom in for us a little bit. We're looking at like a very close up. What are you on, like a yearly?
This is monthly. Yeah, this is the monthly chart for Litecoin in US dollars. And I've had this wedge drawn up here for years. And what we were looking at, I think just a couple of months ago, was we wanted this breakout and then to come back and recheck and then to basically scale up from there.
And today, Litecoin broke down a little bit. I'll be honest with you. I picked some up at a great price. It started moving up, and then it was like, you know what? I don't want to give it all back. So I moved a trailing stop loss into profit at least, so I didn't give it all back. And that closed out on me this morning. And so we'll see what happens from here. I do want to own some Litecoin, but I don't want to. I don't want to give any more money back. I'm tired of giving money back. So watching.
What do you mean giving money back?
I mean, when you're in profit,
making failing trade.
When you're in profit, and then that trade goes negative, you're giving money back.
Okay.
Well, you're actually losing money. And I'm okay with there's giving money back also means, hey, we're in big profit and then we lose that profit. Well, I'm willing to ride out a certain level of volatility, but I don't want to give it all back. Right. So I'll give some of it back just for the sake of letting the trade breathe. But at this point, I'm moving up from my entry. And so I'll take a nominal gain over a loss. And if I had more confidence in what the market was doing right now, I would just let it breathe. But since I don't have that confidence at the moment, I'm going to try to be a little bit more surgical in what I let these trades do. You asked about how alts were doing in general.
Yeah.
And I can share a chart with you that shows really.
Mark, you mind if we bring up Keith's chart now?
What the drawdowns and returns have been over the last 14 days on alts. This is part of the material indicators dashboard here, and this is one of our global metrics that shows drawdowns, 14-day rolling returns for all pairs and rolling drawdowns for all pairs. And so you can see as a whole, a large portion of the market here is not doing well, right? Where most of the market is at a loss over the last 14 days. And in terms of the size of those drawdowns, we've had areas where it was really, really bad, right? Where we saw, 50, 60% and we've recovered from that a bit, but you still see some coins with some nasty losses. Those are the yellow ones here. You can see the scale here on the right hand side. Just as an example, let's see if I can. TNSR, never heard of it. It's down 63%. STPT, 65% down. So we can zero in on any coin that we wanted here to get a sense of what's happening here. And this is another, right? So another way of visualizing it. The blue line is the percentage in positive returns, and the red line is the percentage with drawdown greater than 10%. And you can see that less than 20, a very small percentage have positive returns. About 20% have positive returns, and 88% have drawdown greater than 10% at the moment. That's over the last 14 days. So another way of looking at what's happening here, I got another chart here that might be interesting to look at. Let's look at the correlation between alts and BTC, and here we can see that alts hit capitulation territory here in the past probably week. What's that? Yeah, about a week. What's today?
Tuesday, the 18th.
Okay, so yeah, in exactly a week. It's been about a week of capitulation territory for the majority of alts, it looks like here. So we're now kind of in a transitional phase of what happens next. Do we go into fear? Do we go into optimism? We'll see. And I think that the market is waiting for a sign from Fed Chair Powell tomorrow. And at that point, we will see either a potential breakdown of this structure or recovery. And I don't think it's going to be, like if he's dovish, I don't think we're going to all of a sudden just see a moonshot. We could, but I think there's still enough uncertainty in the market where if we just grind along this level here, grind along this range for a little while longer, that would not be horrible to me. That would be, quite frankly, strength. And what I've been here's what I've been expecting to see. I've been expecting to see more consolidation in this range around the trend. And maybe we do break down into this, what we saw in the weekly with this, 75, 76K level. I could see us chopping in here for a little while until we get some more clarity and confidence out of, how the administrative moves are going to impact the economy in the longer term. But when you see stuff like this, man, I mean, when you see price coming right to the trend line, it's really, really difficult not to buy, right? So I think that we're gonna, it's difficult not to buy, except you have this FUD overshadowing the market, right? That's making it, that's keeping people from buying,
FUD that's going,
right?
Yeah.
And you have this, this, and I honestly, our community has really been discussing this hyperliquid whale for the past week or so, and I have been involved in some other things, so I haven't been able to give it a lot of attention. But I view that as a short-term blip on the radar, right? It's noise, because in the end of the day, in 6 months, are we still going to be talking about the hyperliquid whale? Unless he's still, actively, doing something here. I think that is going to be kind of a short-term anomaly on what happens with price action. And ultimately, it will be a speed bump in the road. And 6 months from now, Bitcoin's going to do whatever Bitcoin's supposed to be doing.
It's interesting, though, because we talk about, speaking of hyperliquid, we talk about seeing all of this data, when looking at centralized exchanges, but it's nice to kind of see some things that are happening on chain a little bit as well.
Sure.
In that sense.
Listen,
we have go ahead.
I think, listen, since we first started this, I've always been intrigued by DeFi. I've just not been confident in the counterparty risk on DeFi. And there's still some steps that overcomplicate it to me. Having to bridge, et cetera, which I know nothing about. And I think the average retail trader knows nothing about. And certainly, obviously some institutions are figuring it out, but you're not going to have JP Morgan or Wells Fargo or Charles Schwab teaching their clients how to bridge assets to utilize DeFi in the way that we know it today, in my opinion, right? I think it needs to evolve and mature, and we'll get there. And I'm anxious for that to happen. Interestingly, I have a buddy of mine who works for Wells Fargo investment banks. And Wells Fargo, for anybody who doesn't know, is one of the large banking institutions in the U.S. And they put out a piece actually in February. I noticed it just the other day. I saw it on LinkedIn. That was really kind of an educational piece on investing in digital assets. And they took a very, very broad look at it. Kind of a deep dive, really, to be honest with you. It went well beyond Bitcoin and Ethereum, and it talked about all of the different ways that this technology and this asset class could be investable, and including utilizing it for real estate, utilizing it for art and music and all of the different applications with NFTs. They didn't specifically say NFTs, but they implied how it's being, how the technology is
ownership
being
and
used
things of this.
in that nature. And as far as I know, they're not offering any of these products yet, but they're starting to educate their investor base. So it's coming.
Right.
And to that end, I feel like we are still, everybody here that's been in this space, whether you've been here for a few months or you've been here for years, we're early.
We are
so
early. I've
freaking
been
early.
here for 5 years and I still say we're early.
Right. So
we are early, and we talk about mass adoption and things like that. And Mark, I think you've said it before. You don't think we're ready for it. I personally don't think that our industry is anywhere near ready for it.
It takes about a generation, right, for emerging technology to be mass adopted. So, like, if we take the 2008 financial crisis as being pretty much the birth of Bitcoin, which I do, that was when the Genesis block of Bitcoin was published. Add something like 40 years to it. So I think 2048, somewhere around that period, when the people that were born with Bitcoin as an assumption, right, are entering adulthood. I think that will be when we can reasonably expect something like mass adoption to occur. And it's very difficult to anticipate like what that's going to look like, because like one of the things that I think Keith has reasonably pointed out is that Schwab isn't going to educate its users on how to bridge and that sort of thing, because why would they, right? It will be Schwab's clients, right? Schwab's customers that will inform Schwab about bridging. And that takes a little while to happen, but we saw it with mobile phones, we saw it with the internet. I think we will see it with blockchains. It's just everyone's in such a rush. I think these things take decades to play out.
In that piece, they spoke about ETFs and the difference between owning an ETF and owning the underlying asset, in this case, Bitcoin, right? So that got me thinking. If you're interested in Bitcoin for as a store of value or as a hedge, then the ETF, I mean, like, why would you freaking own the ETF? You're getting none of the upside. The bank is getting the upside. The bank is getting the upside. So now imagine, let's fast forward a decade or so, and Bitcoin is deep six figures, potentially even a 7 or an 8-figure asset. That's where I see ETFs flourishing in retail, because ETFs are priced as a fraction of Bitcoin, right? I think like Fidelity's Bitcoin ETF, whatever it's called, I think it's like probably in the $70 range right now. I'm speculating. I could look it up and see what it is, but maybe I should do that. I don't even know what let's see what iBit is, right? That's the BlackRock one, I think, right? iBit is priced at $46. Okay, $46 relative to an $81,000 asset. So I think that when Bitcoin is hundreds of thousands of dollars, millions of dollars, and people can buy, people realize they can still buy fractional shares of Bitcoin, right? But if they just want to trade it and invest, like, in that manner, then they can do so. Like, at what point is Bitcoin too expensive to own? Or let me rephrase that, too expensive to buy? And,
it's divisible to what, 8 decimal places.
What's funny though? Normies don't necessarily know this, you guys.
Right. Normies don't know. Normies don't know this at all.
They think, oh, I've been priced out. There's no way I can afford a Bitcoin. Forget it.
Right. So
I think this is why we see that big push towards Bitcoin Cash and
right. But you could take the same amount of money that you would put towards an ETF. Okay. Say you have $1,000 to put towards a Bitcoin ETF. priced at $46 a share. Take your same $1,000 and put it in $1,000 of Bitcoin, and hang on, right? I mean, what people like about this is they can buy hundreds of shares, buy them in blocks of tens or hundreds or whatever they do, to see more upside. But listen, if you're going to make 100% on $1,000, you're going to make 100% on $1,000. Why not put it in the underlying and have something that, if it does boom into this multi-million-dollar Michael Saylor asset, if the U.S. government and the Chinese government and the Russian government all start accumulating more Bitcoin, price will go up. I want to be one of the people.
I did see, I think Michael
hanging
Saylor
on.
just bought another 130. Oh, sorry, Keith. I think there was a delay. I think he just bought another 130. You guys, we have 2 minutes. Mark, I know that you have a hard stop. Rick Barber added a comment earlier that when we were talking about the tariffs, I just want to bring it up. It's not necessarily trade, but here, something we were talking about, Keith and Mark, earlier. Tariffs work when they're equal, as they lead to non-existent tariffs, as they are deemed of no value. However, when they are one-sided, as they have been against the U.S. for so long, they benefit the world as a means of siphoning wealth from the U.S. The current plan will work as it will level the playing field, and the economy in the U.S. will benefit. So this is, I think, what we were talking about in terms of that bigger vision, that longer-term vision, Keith.
Right. And just think in general terms. How many U.S. citizens, myself included, knew or had any knowledge of any tariffs? I mean, like en masse, that we're hearing about, right? I'm not disputing whether they existed. I believe that they exist, right? That this one-sided relationship has been there, but the average American
didn't
know
about
shit about any of this, right?
Or a lot of what we're seeing now, we didn't know anything about.
Right. So they do a poor job of communicating what's really, truly happening. And then when they do communicate it, everything is done with everything's done with a freaking hammer, right? Yeah. Everything's done with a machete and a chainsaw instead of a scalpel. And that's what has the market uneasy.
Yeah. All right. We are at the top of the hour, guys. Mark, I know you got to run. Keith, Mark, thank you guys always so much for joining.
Good show today.
It was a great show. Always. Thank you. It was a kind of a funny start. It made me laugh and kind of just broke the ice for us for the rest of the call. But I shared your personal X account and Material Indicators there as well. Of course, guys, definitely give Keith a follow. Give Material Indicators a follow. It's not just this call. You do your own calls. You are constantly posting about all of the different things that you're seeing in the fire charts and the liquidity book. Super valuable to anybody who is either a trader or looking to get into trading. I know that Mark had to drop, but I shared his as well, along with the link to the simulator that he was showing earlier. So if anybody wanted to kind of experiment with that Bitcoin gold chart and what that would look like, I shared that. I definitely encourage everybody to visit the simulator and test out whatever strategies might come to mind. And thank you to our audience. We had quite a few comments today. It was fun. I always like seeing what everybody's thinking. Sure. Keith, thank you. I hope that it was your father's ankle?
Father's foot.
Well, I hope that he's okay, and I hope that we see a quick recovery.
Thanks. I appreciate it. I do.
We'll talk to you soon. All right. Everybody enjoy your week.
Have a great rest of the week. And tomorrow, Fed Chair Powell.
That's right.
Coming in the afternoon.
You're going to give us some sort of a summary, I'm sure. This is why we follow Keith, you guys.
Have a great day.
You too. Thank you. See you guys.
Bye-bye.